Testing 1 2 3. Testing 1 2 3. Testing 1 2 3. Testing 1 2 3. Hello, this is Jordan, and this is your precious metals market update. This video is being recorded on the afternoon of Friday, May 26, 2017. Thank you so much for joining me today. In this video, I'm going to discuss why I remain cautious and bearish on the precious metals sector and anticipate a potential low in the middle of the summer. Now let's start off with gold in the weekly candle chart here, and the levels are very clear. There's really strong resistance just above 1350, but the real key resistance for gold going forward is 1300. When it gets above 1300 on a weekly or monthly basis, then it will really be within striking distance of taking out the 2016 high. So 1300 is what we really need to focus on. The recent high was at 1297. I'm skeptical that gold is going to break 1300. I think there is a chance that gold's high for the year at 1297 there in April, that's in place. Now, gold has been in an uptrend this year, and you can see if you draw the trend line where I did, connecting the January low and not the December low, you can see that it's bounced off that a couple times. That little trend line comes into play around 1220. Maybe a little, around 1220. And then you can see I have a number of long-term moving averages, not the 200-day moving average, but we're looking at what's equivalent to the 40-month, 60-month, 20-month, 30-month, 40-month. So when you really go on a very long-term basis, all those moving averages are coming in around 1220. I mean, one's at 1209, one's at 1230, but everything is keying on 1220 is a very important level. So gold is setting up here. It's in a tight consolidation, you could say, from between 1220 to 1230. Of course, it's been rising. Let's step back for a second, go to the bottom of the chart. Those are two volatility indicators, and volatility for gold is very, very low. It's at multi-year lows, actually, not just 3 or 4 year lows, but even more than that, or at least very close to that. So gold is setting up for a very big move, and my bias, I don't have a crystal ball, but my guess here is maybe gold holds up okay for most of the summer, but my bias is gold is going to break below and the move is going to be down, and we could see gold coming down to that 1050 low by the end of the year. So a potential big breakdown coming at the end of the summer, maybe early fall. Now, that's just, we're looking out ahead. Things can change, but that's subject to change. That's just my thinking here and now. Now, so to kind of explain, my reasoning on that bias, gold has had a lot of positive factors and things going for it in the last several quarters. I mean, a few months ago, the real Fed funds rate got to, I believe, nearly minus 2%. I mean, the 10-year bond even went negative as far as the real rate. At one point, I remember people were talking about that. You factor in now very recently the U.S. dollar weakness. I mean, the U.S. dollar a couple days ago at one point, and on this chart we have the inverse, so it's flipped upside down, but a couple days ago, it closed at its lowest level since October. I mean, that was near a 7-month low in the dollar. Yet, if you look at the entire precious metals complex, I mean, that kind of strength is nowhere to be found. So, I mean, all those factors, it's just not a good sign for the sector. And then, aside from gold, everything else is lagging on a short-term and on kind of an intermediate-term basis. I mean, let's go through this chart. Look at the inverse of the U.S. dollar. I mean, look at, it's at clear new highs. It easily surpassed this February and April highs. Then we look at gold, which gold made its high in April. Gold broke above 1260. Maybe it'll get up to 1300. I definitely don't see gold breaking above 1300. And again, a big reason for that is, I mean, look at the rest of the complex. I mean, silver made its high at the end of February. I mean, the high in April was kind of a one-day thing. That was a false new high, and evidence of that is the fact that after that, silver was down, 13, 14 days in a row. And, I mean, you can see silver, look at the low in May for silver. It made a lower low, GDX temporarily made a lower low. This 55 stock junior index I created also made a lower low. So, I mean, there's divergences there with respect to the dollar, and also gold continued to trend up. But again, I don't see gold breaking 1,300 here. And then you look at silver. Silver's below its 50-day moving average. I don't see it going much higher. The GDX might go a little bit higher. It's struggling around the 50-day, and the juniors are below the 50-day moving average. And again, this is at a time when a couple days ago the U.S. dollar was at a 7-month low. So, I mean, this kind of lagging, I mean, look at the mining stocks. I mean, they made their highs in February. They haven't even come close to that. So this kind of lagging is just negative. It's worrisome for the sector, and this is the type of action that precedes market declines, not breakouts. I mean, at the best hope would be, I mean, a consolidation for several quarters here. I mean, again, this is the type of action that precedes market declines, not breakouts. Now let's zoom in on our 55 stock junior index, which half of the index is basically similar to GDXJ. We pick companies out of GDXJ for half, and then the bottom half is companies with a 50 million to 250 million market cap. As you guys probably know, that segment has been much stronger. So the GDXJ type segment has been much weaker, but this is the combination of the two. And I mean, so this is a good look at the entire junior sector, and there's a clear downtrend that's been in place since last summer. I mean, the index now is below a 200-day moving average, which is sloping down. I mean, you can see there the 200-day moving average is at 1417. I mean, the April rally failed there. We had a decent sell-off into May, then we had a rebound. Now it's selling off again. It closed 381 as of yesterday. Today it was up probably about 1%. But you can see, I mean, there's clear resistance around the 50-day at 392, 393, which is about 3% higher. And then you have the 200-day moving average at 417. Really strong resistance just above 410. So even I mean, this index could pop a couple more percent, but I would expect it to sell off after that. And where we are here and now, there is 20% downside to the December low. So, and that is where I would want to be a buyer. That is where I'd become bullish. But I mean, it's just a warning because this chart is weak, and the bias is to the downside. And the probability says that this is going to go lower. And I don't know, maybe it will take a while to get down to that December low, or maybe it will happen quickly. I'm hoping that it'll happen quickly. Perhaps that level could be tested in July, earlier mid-July after the Fed meeting. I don't know. Just a comment on the Fed meeting. As far as us precious metals bulls, let's not have an immediate reaction that once the meeting's over, everything's going to rally. Because remember in December, I mean, in December, the market, after the hike, still went down for another 7 or 10 days after that hike. So it's possible that the market does have a summer rally after that hike, but is it going to begin the next day? I mean, who knows? It could begin 2 weeks after that. It could begin 3 weeks. So, I mean, I'm going to, rather than just having a knee-jerk reaction and assuming that we're going to have a rally immediately after the hike, I'm going to focus on the sentiment, the charts, and the levels, and have that tell me, you know, when the risk is in the risk reward is in our favor of buying. Last chart, which I always show in these videos, we have the weekly bar charts for GDX and GDXJ, along with the 80-week moving average. And GDXJ will round up a little bit, say it closed at 32 today. Again, it has strong support there around the December low, 27, maybe a little bit lower at 25. I mean, those are the levels where I would want to be a buyer. GDXJ, I mean, it's lost the 80-week moving average. Go back to 2014, it was resistance. Then in early 2016, GDXJ exploded above it. It somewhat supported the December low, and now the market is struggling with that level. It's trading below it. Same thing could be said for GDX. I mean, GDX, well, in the last week or two, GDX is holding above the 80-week moving average, but before that, it was trading below it. GDX looks like it could be trading in consolidation here, a little bit of a triangle, although it's a little early to call that a triangle. I mean, we need to see it touch one of the other sides. But that's something to keep in mind. If we don't have much, I mean, if things continue to be dead throughout most of the summer, I mean, GDX could trade in that tight range, and then maybe if we get the breakdown in gold, GDX would telegraph that and break lower towards 16, 17, 18. Again, that's if the summer we don't see a whole lot of movement. Or on the other hand, if I'm wrong and things strengthen and the market's able to break out, then of course GDX would trade higher and would test 26, 27 and keep going higher. But again, I'm still negative from just from my standpoint here. I think the next big move in precious metals, it might start in the fall, but I think it's probably going to start at the end of the year, early next year. But again, I don't have a crystal ball. I'm just looking a little bit ahead, and I remain cautious and bearish in the short term. But if we get down to that strong support in the next 1 to 2 months, that will be a good buying opportunity. And again, you can follow all my work at the dailygold.com. Go there. I have a free newsletter. I have a lot of free content that I give away. Also, you can consider my premium newsletter. Costs less than $1 a day, $149 for 6 months. thedailygold.com/premium. I focus on market timing and stock selection in the juniors. And look, to make money in this sector, you have to be in the right companies. You have to get into the companies at the right time. I mean, we have contacts in the industry. We talk to geologists. We find out, which deposits and projects have legitimate potential and which are the ones that are just moving on false hype and promotion. And our model portfolio is a real brokerage portfolio. Everything that everything that we're buying and we say as a buyer, we're buying for ourselves. So keep that in mind. Thank you again for listening and watching this video. And I look forward to publishing another update for you guys in the weeks ahead. Thank you.